AM Best has maintained a stable outlook on Guatemala's insurance industry. Here to discuss the market is Inger Rodriguez, Senior Financial Analyst, AM Best. So Inger, what are some of the main factors driving the stable outlook?
So the first factor driving the stable outlook for the Guatemalan insurance industry is its capacity to grow. We have seen positive numbers in the last 5 years. 2025, the industry reported 9.1% growth in gross premiums, and AM Best expects this pace to continue to 2026, around the 8% to the 10%. The second factor would be the capacity of the industry to remain profitable. Again, we have seen positive bottom line results posted during the last 5 years. And what we've seen in the rated entities and the market in general is a refining in pricing, in technical capabilities and underwriting capabilities, and also overall risk selection and risk management. And the lead insurers, the market leaders, are the ones leading the charge in this one.
Catastrophe risks are high in the region. How are insurers doing in managing those?
So Guatemala is exposed to a number of natural hazards and catastrophe risks, mainly earthquake, volcanic eruption, and hydrometeorological events such as excess rainfall and floods. What we've seen with companies, with rated entities, and also across the market is a very well-structured reinsurance program with a focus on catastrophic protection. And this is placed with global and regional reinsurers with excellent level of securities across the board. Also, Guatemala is a member of the Caribbean Catastrophic Insurance Protection Facility, and they have a parametric coverage for natural hazards that include earthquake and hydrometeorological events, with coverage being renewed already for 2026 and 2027.
Inger, is there anything that could tip the outlook to negative?
The outlook could be tipped to negative. If there were to be adverse political or geopolitical developments that have an effect negative on the Guatemalan economy, that surely is something to be monitored. Pertaining to the insurance industry, what we could have as a potential negative driver would be a catastrophic event that hopefully doesn't come anytime soon. That could spike claims and hinder profitability while also raising the reinsurance prices. And lastly, what we see is a very strong competition within the market. If a pricing war were to happen, what we could potentially see is some loosening of the risk selection practices that could potentially have a rising claim or result in a rising claim and negative bottom line results across the market.
That was Inger Rodriguez, Senior Financial Analyst, AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.